1% is a very conservative number that I use if I'm calculating how much I'm getting paid if I have dividend stocks. Now, it's conservative specifically because you have to run the total of how many dividends you're getting paid by each individual company. 1% is a very conservative number. And also, you're not always guaranteed a dividend. So that's always something to consider, especially when you look into the companies that you're going to invest in. So,
You talked about, so 1% as in to support my lifestyle, I will need to calculate my monthly expense and then use that, let's say 3,000, and then that comes to like 300,000, was it?
right. So using that 1% rule, you're going to need to invest $300,000 in order for you to potentially get that dividend. So, yeah, I mean, you just do the math. Okay, my expenses are, or how much do you want to make if your first goal is I want $1,000 in monthly passive income? Well, I don't know any stock company that is paying you a monthly dividend. At the minimum, it's going to be quarterly. So you need to find a stock, you need to find a company that is going to pay you in January. You need to find another company that's going to pay you in February. You need to find another company that pays you in March. And if they are paying out quarterly, okay, now you're set up for the entire year because January, February, March, and then the same companies are paying you in the same order. But in all, you're going to have to invest 300,000, or you're going to have to take what it is you're looking to get every month, divide that by 1% if we're using the 1% rule. And that's how much you're going to have to invest into that the one company every single month. So if you're looking to get 1,000, you're going to need to invest $100,000 into that one company if you're using the 1% rule. Now, there are companies that pay that pay very well. You might be getting $1 and some change. Once again, it's a math game. So if you're getting $1, you're going to need to invest 100,000. And once again, that number fluctuates based on the payout of the dividend, and the dividend can fluctuate too. So, yeah.
It's going to be risky for people using their retirement income.
I wouldn't say it's risky per se. I would say if you do your homework, you know what you're looking at, it's not really risky. It's more of you are taking on risk. Like that's one thing that I always make sure that I'm clear on with people when it comes to investing, period. Is people think that investing is risky. It's not risky. There is risk though. Those are two completely different statements that have become very synonymous for people who don't know how to invest. That's why it's important to learn to how to invest.
Right. And how to generate, like use the active income to invest in something that generates passive income.
Correct. Correct. This isn't a I need to quit my W-2 type play. That's not what we're talking about. We're talking about, okay, how do I get to my goal with passive income using my W-2? Because your W-2 should be your first investor. It shouldn't be about leaving the W-2. Because you leave the W-2 and you only got one stream of income, you're once again back in the same position.
Right.
You're
We should never
you're
have just one stream of income.
right, exactly. If the plan is to leave the W-2, you should at least have another three, in my opinion, minimum, another three. Because once again, You don't want to be so close to zero. But
Okay.
it also depends on your level of risk too. I'm not mad if you say like, take me for example, I'm able to bring in $2,500 a month from trading, right? Am I going to quit my job at that point because there's potential for me to cover my expenses? No. You now use your job to pay for more investments. You keep doing it. Okay, I use my job to pay for my trading account to get me where I am and reinvest that money. Now it's time for me to go look for another stream of income. Okay, I am now using that money from my job to start investing into real estate. And let's just assume that all my debts are paid off. So now I'm free and clear. All I have is expenses, no liabilities. So okay, I take my W-2 money, and if I can cover my expenses with my trading account, use a trading account to cover your home expenses. And I will say that because of the fact that that is a very freeing feeling. Because now the psychology behind it is I don't have to rely on my W 2. Does that mean we quit the W 2? No, it means we go get another asset. The trading account is one asset. That's active income. That's another active income stream that's highly scalable. You use your W 2. Now we're allocating money to another asset class, whether that's a business or real estate. I'm going to suggest those two specifically off the strength of they have the highest leverage and they're and it's scalable. You keep running that play over and over and over again. And now I wish I had a drawing board, but if we have a W-2, we have a trading account, and now we have these assets. Well, these assets, we're moving W-2 money to the assets. And the asset is now coming in, feeding the trading account. And the trading account is trickling into your household. So now your cash flow is now higher because now
Got
I'm
it.
quickening the pace of my trading account.
Hmm.
Okay, I'm now able to just put another $5,000 into my trading account. That's a lot of money. That's a lot of lot sizes. That's a lot of contracts that you can get for $5,000, depending on your
I
risk
thought
management.
5,000 wasn't much, like to put it in a trading market.
That's why I trade forex. $5,000, you could do a lot, especially as a swing trader. You could do a lot with $1,000.
Okay. Is there a specific, like, or a ballpark amount of how much 1,000 could make if I were to inject 1,000 into it? Of course, I
Nah,
understand the volatility. I wouldn't
I
expect to
would
double it if that's too
no, not
much.
in a not in a short period of time. And that's where you can get greedy, and that's why swing trading prevents you from getting greedy. So, I mean, a
What
thousand
is
dollars not
swing
really
trading?
going. Swing trading is holding the trade for minimum 24 hours. You could be holding that trade for weeks, a month, 2 weeks, but anything over. The point of it is you're catching the market essentially buy low, sell high.
So there's no ballpark that I can kind of gauge an interest in. I know it's kind of hard, but
Yeah, it is, and it's hard because it depends on the risk of the trade. So you can have a trade that has a risk of 50 pips, and let's just say you did zero point zero 0.04 lot. You could take half of that, and that's your 1-to-1. This is a really good example because yesterday I just had a trade hit my first profit target. The other two positions closed out at break even, which I'm perfectly fine with. But let's shit like you cut that zero point zero 0.04 in half. You got two. Your first target is a 1-to-1 risk to reward. So that means I'm risking 50 pips to make 50 pips. You multiply that, you do the calculation, you get $10 off of that. Yeah, you get about $10 off of that with $1,000. Now, that doesn't, of course, the first thought is, I'm not doing all that to make $10. Okay, let's say that you set another profit target at 100. That's another $10. So for one trade, two positions, you made $10. Now you have another open position that you're just running it up. You catch it at you, let's just say you just caught it at the right time, and all of a sudden, like it's just going, running, 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 running. All of a sudden, it closes out with a risk to reward ratio of, let's just say, 8-to-1. Well, 8-to-1, you just made $40 plus the 10. So that's about $60. Is that guaranteed? No. I'm just running like best case scenario analysis on what that trade that I got into last week could have ended up doing. And so this is another reason why I chose forex to swing trade, because in forex you don't have to close your positions when the banks close. With stocks, when a bank closes, your contracts close. And there is no trading at night. Forex, you trade at night, 24/5
Seven.
Eastern time, 24/5. The banks are closed
Oh,
all around the world on Saturday and Sunday. So Sunday Eastern time, 5 p.m. Friday Eastern time, 5 p.m. So literally 24/5. So whatever your schedule is, if you learn the skill of mastering your money and your risk, those are the people who are profitable in the game.
okay. And then afterwards, making the money in forex trading,
It becomes
despite
boring.
the volatility, they can invest in something else that's more exciting.
Absolutely. I gave you the equation. You got no debts. All you're doing is having your W-2 pay for your other investments, and your other investments go right into your trading account, and your trading account continues to feed your expenses. Now you do what you want with your expenses. You can either run your expenses up because you're making more money, or you can keep them moderately, relatively the same. And now it's just like, okay, we went from living a 10, 15, 75 lifestyle where 10% goes into investing, 15% goes into savings, and 75 goes into expenses, to now I'm living 20, 30, 50 lifestyle. Or I even cut that down to, I'm living off of 30% of my income. Now you're doing 35, 35 investing and savings. Like, or even you just keep it at 50, and your income covers 30, your bills require 30% of your income, and now you're just taking trips out the wazoo because you can afford it. Because once again, this is not a quit my job, quit my W-2 situation. This is a mindset shift. How do I make my W-2 work for me? You make it
Weaponize
work.
it.
Exactly. Because they're your first investor. You have to change the concept behind what your W-2 is doing. They're your first investor. Well, first you are, but you have to learn the concept of good money habits. And then you realize, oh, I already have an investor in place. Let me use that investor to fund what it is that I want to do. In this case, we're talking about trading. You fund my trading. I become a profitable trader. I pay down some debts. And now that W-2 is funding new assets. Because that's the point of it. You just will need more assets. This is the
Yes.
game. This is what's in Rich Dad Poor Dad. Like, if you get nothing from that book, assets and liabilities in a balance sheet, who cares about an income statement? We want to see the balance sheet. So banks care about balance sheet. How many assets do you have? Like, if you go look at a stock, you need to look at the financials, and that's on the balance sheet. You need to know how many assets they have, how much liabilities do they have.
Mm,
So, you know, treat your life as a business. I treat my life as a business. I do a financial report every single quarter. I just
wow.
completed my financial report in the beginning of July. I did my own books, every credit card, every bank account. I got two credit cards. I got technically five bank accounts, all have different purposes, and they all are on the bank statement within that financial report. And then I make sure I everything goes to the annual report, and then it also goes to the quarterly report every single quarter.
That's your own finances.
I run my own finances.
You're an accountant.
I mean, my household is a business. So why am I not knowing what's going on? Like that's the only way you're going to catch yourself
True.
slipping.
Yeah, marking down every single expenses, right? What you can
Exactly.
save.
And then you'll realize, oh snap, I'm paying for this. Yes, you are. I mean, you could get rocket money. There's nothing wrong with getting rocket money, so that way they can tell you what's going on. What do you have due? But if I put something on my Capital One credit card, that tells me what subscriptions I have. I can see what's coming up. Capital One tells you
Nice.
inside the app your monthly what monthly payment do you have. If you're subscribed to Spotify and it's on that card, it's going to tell you, hey, on on August 18th, you have Spotify coming out of your account.
Oh, that's a very neat feature.
Exactly. I
Like
don't have to
everyone
pay for
should, we should have Capital One sponsor this episode.
it.
That's a very neat feature. I'm
Right.
gonna
It's
tech Capital
awesome.
One.
We not getting paid by Capital One, but I'm just saying I got a Capital One credit card and it's out. Hey, you got Duolingo coming out on blah 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 date.
That is so nice.
But
Like people don't,
yeah,
they're not aware of how much they're spending on Starbucks because it could be like $5 here and there. And then they have Netflix, they have Amazon, and all these little things adds up. And when they
right.
actually don't need it.
You don't need it, you don't use it. So why keep it? Like that's my
Yeah.
philosophy. If I don't use it
Yeah.
after a certain period of time, it gotta go. But that's like I feel like people have this idea of I may need it at some point. That's awesome. And at that point, you go get it. But if you're not using it regularly, what's the point? Amazon Prime. You're not on Amazon Prime often. Why do you have it? Oh, well, I never know when I'm going to. You can check your statements. This is why I do my quarterly reports. I really could. I used to do them monthly, but then I was like, I got really disciplined in my finances and to the point where it was like, oh, yeah, I know it's coming out. And then certain things will come up and then, you know, you lose track of it. But it's easy to get back on. Like once you have the habit and you know what it feels like I tell people all the
Yes, for
time,
sure.
take 10% of your checkout. That does two things for you. Two things. One, it gives you the discipline of financial habits. Well, first and foremost, you work for that money. Uncle Sam didn't work for that money. So you should be taking your 10% out first and foremost. I don't know any person in finances who doesn't say pay me first. I work for that money, right? Until you're in real estate and you got investors, you pay your investors first, or you got a business, you pay your employees first. Well, you pay the investor first, then you pay your employees. But you just got your W-2. You are the investor. I did the work. I take the money. It's that simple. But we got it in reverse where we're the last ones taking the money. So of course you're
Yeah,
never going to get ahead. You're never going to get in the thriving position of you're always going to be in survival because you don't have you're not building it's not even discipline. It's building it's building confidence in your ability to manage capital. Take your
like business
10%.
should also do the same. Like I believe business models, like oftentimes people running business, they pay off the business first, like the expenses first, and then they pay like the business owners, they pay themselves last. That's why their business don't survive because they take whatever's left, right? So you should always, like business owners should always take a portion of the profit first because you work for that. So take that and then expenses and whatnot. You use whatever's remaining to pay for your expense. And I would say if you as a business owner, you should know how much your monthly expense should be. And if you don't, that's a big problem. And if you know you only have an X amount per month, then you may want to cut that a little, like maybe 50% or something, just so you have some savings as a reserve for the business itself. And then you have the expenses taken care of as well. So you're not like when things go south, you will always have reserve instead of, trying to like you were saying in survival mode. Like you
But,
as a business owner, you want your business to thrive. So so that you can have your financial freedom, your time freedom. That's the whole point of not working for somebody else, right?
right. But that's the big key right there is people don't see themselves as a business owner. Like before you technically own a business, and when I say a business, I'm talking about a business entity. You got an LLC, you got an S corp, you got uh, a a C corp. Before you even get to that point, you're a business owner, and the reason why you're still surviving is because your business has failed. Most people not even thinking about it like that. So
Yeah.
that's why I run financial reports on how I'm spending my money every quarter.
You're the first person I've heard of running their own live bank account as like a business. Because not most
Every
people don't do that.
every aspect of my life is a business. Even my relationships are businesses. Like I look at everything as an asset or a liability. It's literally on my YouTube channel. I give a clear example of that every single currency of my life. And there's four main currencies: time, knowledge, relationships, and then money. Money is always last. All four of those, they have assets and they have liabilities. But I've been thinking like an investor since I was a kid. So just reading that book, Rich Dad Poor Dad, it put me in a different mindset. It really enhanced my ability to think like an investor and start taking inventory of how I'm spending my all those currencies in my life. And really, you can't move into the financial realm until you take care of all of those, until you know what the inventory is, what the stock is of those currencies, your relationships, your the knowledge that you have, the time that you have. I said
That is
this.
so powerful.
I said this. When did I say? I said this over the weekend to somebody. I said, not once when I ask people when we talk about finances or their life, what they want out of life, not once does anybody, not once does anybody, the first thing that they say, I want to quit my job. That's never the goal. That is a statement. That is data. That is information. What information do you get from that statement? You get from that statement the fact that It's not my job that's the problem. It's how I'm spending my time. Because what comes after that, what does become the problem is I just want to be comfortable. So, okay, well, what does that look like?
Mhm.
Well, I just want to be able to pay my bills and da 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 da. Okay, so you have a time problem, which is the
Mhm.
only currency you can't get back. So if that's the currency you can't get back, why are we not focused on you getting more time? And the only way you can get more time in your 24 hours, because it's not like we're talking about, oh, getting more than 24 hours. No, we're talking about more time to do the things that you want. You have to create other assets. That
This
may
is
mean you
a
need to learn
much
different
bigger
skills.
topic for people to explore. Um, one thing at a time, I would say, just so they can learn about forex trading, like create another active income. When you have active income, you can put those results or the winnings of those active incomes to other asset type or other business streams to create more cash flow for themselves to so that they can create the financial freedom, the time freedom that they all want.
Exactly. That's the point. That's what we're doing. That's what we're talking about. It doesn't matter what avenue you're looking to invest in. Use active income to create passive income because that's what we're talking about. Use your W-2 to create to get another stream of income, and then use that income to
Organize.
create another stream of income, and then use that income to create another stream of income. Like that's all we're doing. We're recycling income
If you
over
don't
and
like your
over and
W-2,
over.
change another W-2.
Yeah, just get another W-2. It's nothing wrong
Get
with it.
another one. Like have
But
someone
I
to support sponsor your lifestyle, basically.
right, but I think if you get if you do exactly what we just talked about, right? If you recognize that it's not the W-2, if the W-2 is not the problem, there's no reason to get another W-2. And if you change your mindset behind what your W-2 is really doing for you, you're not getting another W-2. I have been suggested for years since I started my job back in 2023 after moving back from Atlanta from being homeless. I Why don't you go for another job? Why don't you get another job within the company that'll an engineering job? Use your degree. Bro, I don't want it.
Mm.
Not with what I have because there's other things that I'm sacrificing just for just for, me to have a different position. We're talking about we're talking about time. I have the ability to move respectively how I want to move. So okay, the mindset behind it now is not about let's quit, let's retire. Okay, the goal can be to retire, but that means you need to create the best thing you can do is leverage a skill, whether it's a new skill or it's a current skill. Now we talk about trading because that is one of the most scalable, that is a scalable skill. And that's not just a skill in the market, it's a skill in life. Because if you become disciplined with money, you'll be a profitable trader. If you become a profitable trader, you'll be a disciplined person in life. So we're really talking about characteristics. I haven't heard now one profitable trader say that it has not changed their life. Why? Because the markets will tell you who you are. If you are impatient, the markets will show you. If you have terrible money habits, the market will show you. If you have any flaws, vices, the markets will show you. If you have poor money management habits, the market will show you because you'll over leverage. You'll over leverage, and all of a sudden, your account's gone. Trust me, I'm prime example. The first week that I got into trading, 75% of my account gone. I didn't even know how. 75%. I do know how because at some point I did remember, but I was not tracking. And it was because I was losing money, but I kept my risk the same. I didn't keep the risk percentage the same. I kept the risk dollar amount the same. So if I got $1,000 account and I'm supposed to be leveraging and I'm supposed to be risking 2%, that's $20. But if my account hits 800, that's that shouldn't be $20 anymore. But I still was doing the $20 over and over and over
Ah,
and over
okay.
and over and over and over again. And you do that until you look up one day and say, oh shoot, I got $250 left in my account. How did that happen? Because you never changed your risk. And that's why I don't day
Wow.
trade anymore. That's why I don't scalp anymore. Because there's a psychological aspect of it that allows people to lose because you're constantly getting in the market, constantly getting in the market. And what that does is it creates the habit of revenge trading. Oh, I got to get that back rather than coming
Right.
away from the charts and analyzing what behavior you had in the market.
When you trade, let's say you have $1,000 and then you had some profit. Let's say you won like a double it. Would you then reinvest the $2,000 or you would keep the profit or like the original principal and then just to invest the extra? So you already have your capital back, right? Like that is not your risking. Like anything else that is extra, like you can lose. Does it
Uh,
make sense?
so you're saying you start out with a
The
thousand, you make it to 2,000?
profit is 1,000. So would
Okay.
you just invest the $1,000 profit instead of now your account has 2,000 because the 1,000 is the profit, right? Plus your capital.
I would, at the minimum, I would reinvest 50% and take the rest home. But really, doubling your money, that's that's a long-term game. I could we could get into a whole nother conversation about this, but in what became a great innovation in the trading space is prop firms. This is a completely different conversation, but I'm just introducing that into the space. Prop firms is OPM. You know what OPM is? Other people's money. Prop firms is OPM. So that allows you to scale your money a lot faster because you have a lender. So you have to go through an evaluation. They give you a virtual account. Once you pass the evaluation, now you're able to collect payouts. They're paying you for being a profitable trader. Not many people make it through, but for those who make it through, they're collecting checks as long as they remain disciplined, as long as they continue to trade the same way. That's a great way to get in when you have little capital. So that way you can take, once you develop this consistency and you become an expert trader before putting money into the market, which I highly suggest. And I suggest that because I've done it before where I put money into the market prematurely. I didn't do the homework and I wasn't behaving like a professional. You take, let's just say, for example, $100 is required to get this account. You take that $100 and you make $100. Well, you just doubled your money by using OPM. So OPM is not just in real estate; it's in the trading space too. But it's like best believe the money management aspect really affects people. Like risk management really affects people, but you have to develop a constructive relationship with money. If you don't, you will not be successful. And that's just in any space. That's even in real estate. If you don't conquer your relationship with money and make it constructive, it will bite you in the butt every time because you don't understand how to mitigate risk. Business, that's a little bit different. Like business has different levers that you can twist and turn to produce income, reduce expenses. It's a lot more manipulative. Trading in real estate, no. Trading, you're literally responding. You're reacting to information. People think I need to predict the market. You're reacting to information. That's all you're doing. With real estate, you can take it the same way. I'm reacting to information. Okay, the seller is saying this is the price. Hey, the property's not worth that much. What is something that we can do creatively? Let's look deeper into this so we can, okay, I really like your property. It cash flows, but like it's not worth that much. So what can we do? You're mitigating risk. And then on top of that, you're still using OPM. If you do a seller finance, that's OPM. It's just that the owner or the seller is carrying the loan. When you go buy a house, that's OPM. Not many people are buying a house outright. They're going to the bank, getting a conventional loan. OPM. So trading and real estate, they really go like the principles really go hand in hand. And when I started getting into the real estate realm, having the trading background helped me understand it a lot differently. It's still like you have different strategies. Like without really getting too deep into this, because this is a whole day's worth of a workshop or a webinar. Scalping, those are your fix and flippers. They're getting in the market quick and they're getting out quick.
Okay.
Those are your day traders. They're getting in the market, they're buying a house, they're going to flip it, they're going to make it look really nice, and they're going to put it back on the market. It's the same thing as day trading. Swing trading, these are like when I do it, when I think about it, I compare it to the commercial assets, your large multifamilies, your industrials, your retails. This is your 5 to 10 year play. Same thing as swing trading. You holding this for a couple days, a couple weeks, maybe a month, and then you got your position holders. But your buy and hold strategy, those are your position traders. These are the people who are looking to get in. They're looking at weekly, monthly charts, and they're going to hold that position for months at a time, years at a time. They're still buying low, selling high. They're buying low, but they may not even sell high. They just want to rack up cash. So the
If they
principles
don't
in
sell,
trading, you're just
how
collecting
are they
cash
gonna
flow at
rec
that point. You're just collecting cash flow. At some point, you probably
Oh,
will sell. It may not be you who sells. It may be the next generation who sells. It may be the
okay.
generation after that. So that's what I'm saying when I was able to bring trading into real estate. It's a very easy segue once I learned the game and understood the game. So okay, it's the same thing. It, but that's how everything is. Like you can connect the dots between everything in my eyes. And I haven't seen that one concept that I can't see in trading that I can't see somewhere else in life.
That's a brand new concept to me.
I feel like I just gave mad game right there. I'm
Keep
running.
on playing this game because this gonna go big. Like if you play
Oh,
it right,
absolutely. Absolutely.
if anyone plays it right with the right mentor, with the right coach, and I've heard it before, like you don't need a coach to get into anything, you can just study online. You pay either way. You either pay with money or you pay with your time.
Right.
And if you can afford it, why don't you pay with money to experience, like you don't have to go through the losses that, the coach has been through that actually save you more money. So the ROI is actually very high. And the elites in the world, no matter the profession, they all have coaches. So what makes you think that you are better than everyone, every elite in the world, that you don't need a coach, you can just do everything DIY? It's not everything is a scam. You just need to know who is the real deal. Like you just need to do your due diligence and get their track record and, go by word of mouth and not by the closers like trying to sell you. You gotta go online, go on Reddit or something, do your review, all that to verify the person is actually legit before you pay your hard-earned money into any coaching program.
Absolutely.
Yeah.
You know, it's just like looking up your currency pair.
Yeah.
You need to see how that market is moving. Where it's just like looking at your piece of real estate but you're interested in. You're gonna do your due diligence.
hmm Don't just don't go with the hype when there's one guru coming up and there's just all the hype going on and they just think that it's gonna work. This is marketing. If you have money, you can do marketing. But if you do your due diligence hard enough, then you'll see like I would say no matter who the guru is, there has to be some losses in their track record, like experiences, to be able to be a guru. Like if they're telling you that you follow me, I will never let you down, like I win all the time. I'm sorry, but in investment world, there's no guarantee. If anyone's guaranteeing you anything, that's a scam. Like that is a red flag right there.